Today's focus. Will this week's FOMC set the tone for Bitcoin to follow the script of rising first and then falling? The US SEC directly points out that the disclosure system has gone off track. Can reforms truly reverse the downturn in the capital market? Dogecoin's 12th birthday. Will ETFs give it another boost? December 8th, Monday. Where is B-Link on the TV Chinese channel? I'm Dong Dong, and now let's look at the most important data headlines in the crypto world over the past 24 hours. The FOMC is about to meet again. The market now basically takes a 25 basis point rate cut as a given, with a probability of 82.8%. But the real question has never been whether they will cut rates, but whether Bitcoin will once again surge first and then crash afterwards. September and October were perfect examples. Before the news was released, prices soared rapidly. But once the news came out, they dropped even faster. It was a textbook case of buy the rumor, sell the news. Will it be the same this time? There are two things to watch. Is new money coming in and are leverage positions blowing up? Exchange reserves have increased, and as for Bitcoin, it's more resilient as a reserve asset. When it drops, rebounds depend entirely on hype. Once the funding rate gets high, that's a warning sign. This shows that all the bulls are crowded at the door waiting to get burned, and as soon as there's volatility, they get liquidated and kicked down the stairs. If capital just stays neutral and steady, the market's temperament will naturally be much calmer. So don't bet everything on the outcome of a meeting. Whether the market performs well depends entirely on whether there's money coming in and whether leverage is stable. If you want to survive longer, start by reducing your positions. Have 3 contingency plans ready. Over the past 2 weeks, Bitcoin has been like a sudden, all-out buying contest across the entire network. The taker-buy volume has surged regardless of price movement, with momentum traders chasing buys and big players taking advantage of the volatility to jump in. Shorts are being forced to close their positions, and every time the price drops sharply, the green bars on the chart instantly shoot up to the ceiling. The market's mentality of buying the dip is also at an all-time high. The most striking thing is that as soon as the buying surges, the price immediately makes a small rebound, as if the buyers are trying to regain control. But here's the problem. The more aggressively people buy, the slower the price moves. It's like all the effort is being spent, but there's no increase in speed. This usually means market depth is thinning out, buying power is getting scattered, and the trend is starting to get exhausted. In the short term, it can still hold up. But if the buying continues to stall, the market is very likely to shift from buying every dip to entering a fatigue phase where it just can't rally anymore. In the past 2 months, Bitcoin has dropped by 36%, but the strangest thing isn't how much it's fallen, it's that the market isn't panicking at all. If you look back at those 2 major events in 2024, when it started to turn down from $73,800 in April, the inflow to exchanges immediately soared to 208 million coins. In December, when it broke through $100,000, it was the same standard procedure, rush to the exchanges to cash out as quickly as possible. But this time, the drop is even deeper and has lasted longer, yet the trading volume is only 1/5 of the previous peak. It's so quiet that everyone seems to have forgotten the market is going down. In other words, no one is in a hurry to sell, and no one is dumping their holdings onto the exchanges. As for long-term players, they're just lying low and riding out the volatility. The on-chain structure is surprisingly stable. This kind of cold inflow, this is often a psychological rebalancing that happens in the middle or later stages of a trend. As long as a bit more new capital comes in, the rebound could suddenly accelerate. To put it plainly, even though prices are dropping sharply, people's mindsets are surprisingly steady. This kind of eerie calm is usually not a bad sign. In fact, it could be the prelude to the next big rebound. Please like and follow to stay updated on the latest 24-hour news in the crypto, blockchain, and mining circles. Click the little bell to join the channel and become a member. Get your member wealth codes from Monday to Friday. Our weekly review, always at 8 a.m. every Monday, is already online as scheduled, so members can check it out right away. In the past 20 years, the US stock market has been in terrible shape, with the number of listed companies dropping from 7,000 to 4,000. What about the good companies? They've all gone to the private market. Ordinary investors still want in? Sorry, there are no tickets. While everyone is complaining and feeling lost, the New York Stock Exchange invited SEC Chairman Paul Atkins to take center stage in the main hall and speak. The topic went straight to the heart of the matter. The US capital market is about to undergo a major overhaul.
Among Paul Atkins' 3 major curses of capital market revival, information disclosure reform is core. He noted the current SEC disclosure system strayed from the 1933 Securities Act's original intent, materiality as its guiding principle. Instead, it's become a platform for political and special interest groups. He advocates disclosure should return to investor-oriented principles. First, financial materiality. Second, tiered disclosure.
Next year marks the 250th anniversary of the signing of the Declaration of Independence, which, as you mentioned, is all about liberty, individual freedom, the right to be secure in your property, and the pursuit of happiness. The thing is, capital markets have been the driving force behind all kinds of innovation, with investors taking risks with their money for entrepreneurs to develop their products. And in fact, America was an investment before it was a nation, because English investors, British investors, put money into trying to start settlements.
The core of Batkin's proposed reforms is to return shareholder meetings to the essence of corporate governance, separating voting from external political issues and refocusing on board elections and major business decisions. At the same time, the reforms aim to optimize the securities litigation environment, reducing frivolous lawsuits while ensuring reasonable protection of rights. This allows companies to reduce legal risks after going public so they can devote more resources to operations and innovation.
Paul Atkins's speech basically boils down to one point. The capital market is not just a system where money circulates among institutions, but an engine that enables ordinary people to rise through their own abilities. He also took the opportunity to criticize the government's approach of redistributing wealth, making his point very clear. History has already proven that a cake grown by the market itself is bigger and better. His closing remarks were also quite thought-provoking. The future doesn't rely on nostalgia, but on whether the next generation dares to write new stories. To put it plainly, ringing the bell is just the opening act. How fierce the US capital market becomes next depends on whether those who come after are bold enough to take up the baton. Dogecoin is now 12 years old. Back then, in 2013, programmers Billy Marcus and Jackson Palmer just couldn't stand seeing the internet flooded with all sorts of random, hype-chasing altcoins. So they simply created a satirical version of Bitcoin. They rewrote a few lines of code, slapped on a Shiba Inu meme, and didn't even bother to write a white paper. Just launched it straight away, all about having fun and being carefree. Unexpectedly, this joke coin just kept getting more and more outrageous. What started as pocket change for tipping internet jokesters has now become a universal little dog that can be used to pay for parking in the US and even buy Singapore Airlines tickets. From a parody to a top 10 cryptocurrency by market cap, the plot twist here is almost as wild as Dogecoin itself. Emotions are stirred.
The real accelerator behind Dogecoin has always been Elon Musk. From calling it the people's cryptocurrency to promising to take it to Mars, every time he speaks out, Doge becomes the center of attention in the market.
Do you think, strangely enough, even though Doge was originally designed to be this ridiculous joke currency, its actual total transactional throughput capability is much higher than Bitcoin? And the fact that 5 billion Doge are created every year is actually, I think, good for using it as a transactional currency.
After entering 2025, the story of Dogecoin no longer relies on celebrity endorsements. Tesla has already opened up some merchandise for payment, X is actively advancing native payment integration, and Dogecoin's transaction fees are less than 1 cent, giving it a strong advantage for everyday payments. What truly caught the attention of capital was on October 24th, when Grayscale launched the first United States spot Dogecoin ETF, Doge, which was officially listed on the New York Stock Exchange. Although the trading volume on the first day was rather conservative, there were very clear signs of early positioning leading up to this point. It's as if the market is waiting for a concentrated breakout window on Dogecoin's 12th birthday.
To be honest, there are plenty of criticisms about Dogecoin. It issues 5 billion new coins every year, and its technology hasn't seen any major upgrades for years. But somehow, it's managed to survive thanks to a group of die-hard fans around the world, and in fact, it's only getting more exciting as time goes on. As the top dog in market cap among meme coins, it also has an astonishing number of holding addresses. Its charitable culture is even more famously heartwarming. From crowdfunding for the Jamaican bobsled team to pouring money into education and environmental protection, who would have thought that this Shiba Inu is actually more like a legitimate project than many so-called serious ones? What's even crazier is that institutions are now eyeing it as well. The community is even discussing future directions like POS and cross-chain. Everyone is passionately discussing it. In just 12 years, Dogecoin has evolved from a joke coin into an industry calling card. Even Dogecoin itself would be surprised by how quickly things have turned around. Can playing like this really be reasonable?
Here there are legends of overnight riches, as well as carefully orchestrated scams. This is a dark forest of chaotic development, but it also nurtures a lake of hope leading to the light. The ultimate destination of faith is freedom. The endpoint of consensus is equality. This TV channel will guide you through the fog, help you see the future, and together we'll gradually become wealthier.
With the implementation of the 3 regulatory red lines, RWA has been declared illegal, and overseas participants will be held accountable. Solana lending is facing a trust crisis, Jupiter's recollateralization poses hidden risks, and the Camino migration issue has escalated. Last Friday, the entire crypto and financial world was shaken to its core. Is the November pullback just a bull market shakeout or a sign of an impending bear market? It's obvious at a glance. Those who make predictions are bound to be eliminated. Can we withstand the debt crisis? Time was directly singled out, and along with stablecoins and aircoins, was put on the blacklist and classified as part of illegal activities related to virtual currencies. What's even more disheartening is that the country has never approved any RWA projects. All those so-called RWA projects on the market right now are unlicensed, operating in the wild. If anyone is still dreaming that they can become legitimate once regulations are in place, it's time to wake up.
Regulators have drawn 3 red lines for RWA. First, RWA is considered a financing and trading activity, and whether anchored to real-world assets, it must be under securities law regulations. Second, even if assets are real, tokenization cannot guarantee ownership or settlement, and security risk spillover is highly uncontrollable. Third, all domestic RWA activities are strictly illegal, no exceptions. The document clarifies legal risks: illegal fundraising, unauthorized public issuance of securities, and illegal operation of futures business. It emphasizes joint liability within ecosystem chain, domestic individuals of overseas institutions, and institutions, individuals providing RWA services will be held accountable if they knowingly or should have known about illegal nature and participate.
Right now, the market is a mixed bag. Some small companies with only a few million in revenue are also considering how to do things the other way. Even though more and more projects are being launched, if you take a closer look, you'll find that a lot of the real information about these projects isn't made public, and they usually get an immediate reaction from the capital markets. So if you think about it carefully, isn't it likely that many project teams will start to act in questionable ways during this process?
This wave of regulation isn't a sudden shift, but a systematic response to recent chaos in the RWA space. As scams increased, regulators address underlying issues rather than just surface problems. The core criteria for judging whether something is akin to a pyramid scheme are also very clear. As long as it is linked to fundraising and trading, there is no legal path for it within the country. For industry participants, the path forward has been made completely clear. Either move your team, assets, and users entirely overseas and sever all ties with the Chinese market, or immediately pivot and stop stepping on this policy landmine. The simultaneous statements from the 7 associations essentially serve as a heavy blow to the industry. Regulatory scrutiny will intensify, leaving no room for exploiting loopholes. In the past, Solana rose meteorically in a year, from mobile to L2, pushing DeFi's popularity. At its peak, 2 major timing protocols emerged. Jupiter and Camino were fiercely arguing on the spot, not over face, but over blocking the liquidation pathways on the collateral risk chain. These hard-hitting issues directly pried open the black box of Solana's risk transparency for the entire network to see. This matter isn't about who is attacking whom, instead a wake-up call ecosystem-wide. DeFi's maturity requires excitement alone isn't enough. Trust mechanisms, risk isolation, and protocol game theory, these need to be re-evaluated and strengthened. In short, Solana is sprinting ahead, but this conflict reminds us that moving fast, you still need to make sure the brakes work.
The conflict between Jupiter and Camino escalated, with community emotions erupting, drawing Solana Foundation chair Lily Liu's mediation. She used data to expose the dispute's absurdity. The global crypto lending market is worth $73.6 billion. Ethereum accounts for $41 billion. Solana has only $5 billion, under a tenth of ETH's total. It's even further behind, not reaching 1,000th of traditional finance. She emphasized that whether it's the controversy over recollateralization or protocols blocking each other, all of this is far beyond what the current Solana ecosystem should bear.
Jupiter and Komodo are going head-to-head this time, which is basically shining a spotlight on the gap between Solana and Ethereum for the entire ETH community to see. After 10 years of hard work, they've maxed out risk parameters, liquidation depth, institutional participation, and credit. On the Solana side, the lending market is only $5 billion, and now they're trying to introduce more complex recollateralization strategies. The whole ecosystem is getting tense even faster than during a market crash, but interestingly, this argument has actually pulled Solana into a mandatory growth phase. Everyone is finally starting to seriously discuss risk, how to isolate it, how to define governance boundaries, and how protocols should collaborate. These are all issues that only mature ecosystems have to face. Lily Liu and Lei also put it more bluntly. Solana's real competitors aren't the brothers in the list, but the vast market outside. If you want to get stronger, it's not about arguing or talking tough. It's about three things: transparency, governance, and attracting big money.
When the community asked whether CZ's tweets were actually posted by the team on his behalf, he laughed and replied that while his assistant does have access, they basically never use it. All those random tweets on Twitter are posted by him personally. Bitvoice CIO Manher revealed on X that Harvard has really gone all in this time. In the third quarter, they directly increased their Bitcoin holdings from $117 million to $443 million. This is totally the kind of institution that just wants to buy more the further the price drops, completely acting like someone in love. Japan's Bitcoin treasury player, Metaplanet, has been holding steady without increasing its position since the end of September. What's worse, its stock price has plummeted from 1,781 yen after that surge in June all the way down to 398 yen. It's like riding a roller coaster that only goes downhill, never uphill. Lookontrain has set its sights on a big move. 21 Capital, backed by Fitzgerald and Jack Mouse, directly transferred 43,122 bitcoins into a new wallet worth $3.94 billion. It's like stuffing the new house full all at once. Makes you really curious about what they're planning next. French President Emmanuel Macron spoke bluntly. If US crypto regulation stays this lax, the whole world will be breaking out in a cold sweat. Stablecoins are once again tied to the fate of the US dollar. If the US lets things run wild, the risks will spread directly. He also specifically called on the European Central Bank to adopt new approaches soon, or else new financial risks will leave all of Europe pulling their hair out.
In the crypto world, you might get the direction right once based on technical indicators, but you can never survive long-term in the market by going all in. Position management is the only real shield in the crypto space. Most people in the market don't fail because they can't read candlestick charts, but because they can't handle the volatility. When prices go up a bit, they get greedy. When prices drop a bit, they panic. They add to losing positions and end up getting liquidated. The crypto world has never lacked smart people. It lacks traders who can control their impulses. One iron rule always applies. Your position size should always be lighter than your emotions. When volatility makes your heart race, the problem is never the market, it's that your position is too large. Being fully out of the market keeps you clear-headed. A medium position makes you anxious. A heavy position leaves you on your knees, praying. The real cause of death in the crypto world is never the trend, but leverage. And your position size, it determines how humble a trader is toward the market and also how long they can survive in it. Remember, your position size determines your fate. Controlling your position is controlling your future. Alright, that's the main content of this video. Our channel focuses on valuable news summaries in the crypto, blockchain, and mining space. We provide news updates as well as in-depth special reports. If you find our channel valuable, feel free to share and follow us. You can also become a member and receive our members-only wealth codes from Monday to Friday. Let's add a zero to our assets in this bull market. See you tomorrow.